we're the richest country in the world, though. So the U.S. has the world's reserve currency. So if you think about the way the economy worked 24 months ago, the countries like countries like Russia and the like export a trillion dollars worth of raw materials, like energy and metals and the like. And then countries like China export $1 trillion worth of products and services. And we pay for them by sending back $2 trillion worth of dollars. So what we do is we export 2 trillion worth of inflation, and they export 2 trillion worth of products and services and energy, because we run the banking system of the world, right? The banking network plus the US dollar is the world reserve currency.
Bitcoin has outperformed almost every traditional asset in recent days. Observers said the cryptocurrency has stayed resilient to renewed turmoil in traditional markets due to several factors, including the absence of large sellers, continued holding by long-term investors, and quarterly options expiry. Since the Federal Reserve raised U.S. borrowing costs by 75 basis points a week ago, the dollar index has rallied 4%, while the S&P 500 has dropped by 6.4%, and the British pound has crashed to an all-time low against the greenback. Bitcoin, however, has remained locked between $18,000 and $20,000. Hello and welcome to Money Talks. In today's video, Michael Saylor updates about his thoughts on fiat money and government intervention in crypto, ESG policy, and top-down central government. Michael also talks about it is riskier to stay where you are when considering to what extent governments are suppressing the free market, controlling your assets, and manufacturing metrics that don't reveal the true picture.
I think that if you're an individual looking for the rational path forward, what you want to do is embrace technologies or ideologies that reinforce individual sovereignty and freedom, and they're rational. So hence Bitcoin, right? Like if you have a bunch of money and you have a choice, are you gonna buy $1 million of gold and put it in a bank of a centralized institution that will seize it? Are you going to buy $1 million of land in the middle of Beijing where the government of China could just take it from you? Are you going to buy $1 million worth of a stock in a Chinese company? How about an American company? How about an Argentinian company? Or are you going to buy $1 million worth of a crypto asset that's in cyberspace beyond the reach of a government or a corporation? And so clearly, the answer is, if you take all of your money and all of your power and you put it in the middle of Beijing, right? They own you. And if your life is not consistent with the policies of that government, then you lose everything. If you took all your money and you invested it in New York City, the mayor of New York could just take it. And if New York, if you took all your money and you put it in New Zealand and New Zealand locked down the economy for a year, right, then they own you.
Bitcoin regained the $19,000 level Wednesday intraday as industry watchers pondered anew whether the largest cryptocurrency would become a go-to asset in times of high inflation. BTC was recently up about 3% over the past 24 hours and roughly 6% over the past 7 days. Following the philosophy of buying when there is blood in the streets and the common saying of being greedy when everyone around you is fearful, we might be at an opportune time to start slowly placing capital.
The challenge with money is the fiat currencies that are used commonly as money, they're all broken. They all have a big hole in them. We could call it inflation, but inflation is such a charged term because most people think inflation is CPI. The defect in fiat currencies is monetary inflation. It's the expansion in the money supply, not just the increase in consumer goods, because the CPI is it's a sub-metric, right? If you look at the US dollar, the supply of dollars has been increasing 7% a year for 90 years. it's been increasing 15 to 20% a year for the past 2 years.
Whoa.
Well, if you go back to 1930, my house in Miami Beach cost $100,000. And if you roll the clock forward to 2012, it cost $14 million. And today it would cost you $40 million. So it's 400 times more expensive than it was, 92 years ago. Now, if you back solve that, you'll find that works out to about a 6% or 7% annualized inflation rate, right? And if you go and you look at any kind of scarce, desirable asset, something that is you can't make any more of, you'll find typically the increase in cost about 7% a year normally. You can actually see, if you look at the market basket of things people want, like really good healthcare, really good education, a beach house in the Hamptons, artwork, Picasso's, right? That kind of stuff. That doesn't go up in price 1 or 2% a year. That goes up in price normally about 7% a year. And if you look at the price of a basket of stocks, like the S&P, has gone up about 10% a year. Well, the reason it's gone up 10% a year is because the money supply expanded at 7% a year, and then the underlying companies probably grew 2 or 3%, effectively.
The macroeconomic environment has had an increasingly significant influence on the crypto market in the current bearish sentiment-filled market cycle. BTC's latest rebound Wednesday followed the Bank of England's announcement earlier in the day that it would buy bonds after the government's tax cut plan triggered a massive sell-off. Painful inflation has led central banks, including the U.S. Federal Reserve, to pursue aggressive interest rate hikes, putting downward pressure on prices of risky assets from stocks to cryptocurrencies.
When we were on the gold standard, theoretically, during the gold age, 1870 to 1914, if a dollar was convertible in a 20th ounce of gold, right, and you really pegged it hard to gold, then you're anchoring the currency into a hard asset. Now, gold isn't fixed in supply. The gold supply increases at 2% a year. 2 to 3% a year. So if you're on the gold standard, that means that the supply of money would be increasing at 2% a year, or otherwise doubling every 35 years. So money under the gold standard, perfectly executed, bleeds energy every 35 years. It's got a half-life of 35 years. But that creates stable prices, Tom, because the economy grows at 2 to 3% a year. So if the economy grows 3% a year, if the money loses 3% of its value a year, then everything kind of stays stable, right? The demand increases, the supply increases, right? That's a good situation. In that case, you can save your money, and 30 years from now, your money will be worth as much as it is today. Now, if it turns out that you're saving your money and the supply of money is increasing at 7% a year, then the money is cut in half every 10 years, right? And so that means in 30 years, the amount of money you have will be cut in half once, twice, 3 times. So you would have 12.5% of your wealth in 30 years saving money under the fiat standard, under a 7% regime. Now, 7% was about the rate that the U.S. was inflating the dollar supply. But in the developing world, in weaker countries, you would see them inflate the money supply about double that, 14%. So the half-life of their money is 5 years. The half-life of the dollar is 10 years. Most people don't even notice 10 years as half-life, except that anecdotally, if you asked anybody in the past 20 years, are you going to save your life savings in a checking account that earns 1 or 2% interest in dollars? They would tell you no. I know intuitively the cost of a college education is going to go up. The cost of a house is going to go up. I can't just save in dollars that generate 0% interest.
The global crypto market capitalization has dropped from $2.9 trillion in November to $959 billion now. We think that crypto is just following the same trend as the market, and it's just pure risk-off appetite because of the current volatility and uncertainty. if the stock market rally is able to overcome hard landing fears, that should provide a nice backdrop for cryptos. This broad risk-on rally doesn't seem like it has legs to stand on, but this bounce could last a little longer. So, do you agree with Michael Saylor that we're already in a brutal recession? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.